Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So we have those types of scripts going on in the markets for the euro, the pound, Aussie, so to speak. Obviously, sometimes we have a little more tighter view of the euro because it really is the key alternative currency against the dollar. It tends to be the mirror image move against the dollar, so having a euro view is always important. But we have them on each of the currencies. And you can start to develop these scripts as you think in terms of interest rate differentials and economic growth. When you want to develop a currency script, start there. Look at what the interest rates are in these other currencies that compete against the dollar. Look at the basic economic growth and look at the trends of these against the dollar. That in and of itself, if you just understand those basics against the dollar and then watch how these things start to change against the U.S. interest rates or the U.S. economic growth, again, that'll put you in the right ballpark. So when you think of currency scripts, don't get all tied up into thinking you need to know everything there is about the country. Keep it simple at first. Think of the interest rates and look at the basic economic growth, and that's a starting point, and you'll be surprised how fast you can start to layer on some more sophistication there. The term global macro, people think it's just so hard to do this stuff, but the reality is it's really not that hard. Again, we do this for a living and we do this every day, so it's a little bit second nature to us, especially after doing it for so many years. But we don't do, you'll be surprised that we don't do that much. And it's things that you can do, 15, 20 minutes during the day. Maybe it depends on how slow a reader you are, but it's not that much. And here is what we try and do every day, besides looking at our charts and looking at some intermarket charts that can give you a big help in terms of global capital flow. We do a lot of scanning in the morning. We don't necessarily pick something we like and just read right through it or read through everything. We scan through that Wall Street Journal news section you see in the Wall Street Journal. We do it online and just again scan. We're looking for the big stuff. You're thinking global macros. You're just scanning down, looking at the stories. Something that, hey, as the story comes through, that it validates the consensus. There's another big story, validates the consensus. Here's another story. That's, hey, this particular story right here really would be a powerful driver for my secondary alternative, my alternative view. Nobody's paying attention to it. Boom, that's the way these things start to pop out as you do your scanning. Obviously, if you find something very important to your existing view, you're going to just go in and read the story and get some more detail. Bloomberg.com, we do the same thing. We just scan that front page and we just scan it. When we do our currency currents in the morning, currency currents is our global macro view that we provide free every morning that you can get on our website. But when we do that, part of those news items, those top news items, we grab just from the scanning process that we do normally every day. Yahoo International News, it's a great place. They have Reuters News, they have AP News there. You can get if you go to Yahoo International News, they'll have top Reuters and AP stories for international. Domestic economy, broken out by commodities. It's a great place. And again, you're scanning those stories. You're scanning through those stories and getting to feel what's going on in the world each day. Is the view being validated by these things? Is the view starting to be invalidated? If the view starts to look like it's being invalidated by the stories, what's the price action doing? Is price ignoring these stories, which means you have a pretty decent, powerful, self-reinforcing trend? Or is price action starting to move on some of these stories that support your secondary alternative, and the market hasn't quite picked up in it? Are we starting to see some deviation as these stories start to pop in price action and the consensus view? That's the type of thinking you're just going to try and train yourself to do. So again, you can do this in about 5 minutes right there. We actually read the credit market section in the Wall Street Journal. I don't think it's as good as it used to be years ago, but ultimately credit The credit markets, interest rates are the driver of everything financially in the world. They're always the most powerful driver in the background of currency prices, because interest rates is what greases the globe. Credit markets is what greases everything in the world in terms of movement. So it's always good to have a good understanding of what's going on in the credit markets. Again, you're not going to have enough understanding to work as a dealer on Wall Street, but you want to understand the basics of what's going on in the credit markets. Are they tight? Are they loose? Is there a particular is there something particular going on there? Again, you don't have to be an analyst to get a feel for that. What does the yield curve look like? Are long-term rates expected to rise? Are short-term rates in the U.S. expected to rise? Those types of things is what you're looking for, and you'll be surprised as you start to just pay a little bit of attention to this stuff, how fast you can get it. We try and read anything Carolyn Baum writes. She writes at Bloomberg.com, and again, she's free. She has written on money and credit markets for many, many years and does a wonderful job of taking some esoteric stuff, putting it in terms we can understand. Always has some, as far as I'm concerned, really some great insight each and every time I read her on the topic. So she'll take you through and explain some of these tougher topics in detail. Obviously, there are other places you can find this information. These are just some that we definitely look at each day. We look at others too, but these are ones that we try not to miss. Morgan Stanley Global Economic Forum. If you haven't heard of this or haven't read it, I suggest you take a pen and pencil right now and write down Morgan Stanley Global Economic Forum. You will not be unhappy you did it. You just go to morganstanley.com, ms.com, and there's you can find it up in the menu bar. This is the top global economists that come on and write each and every week, every day. Usually, sometimes it used to be 5 days a week. Now slipping back 3 or 4 times, but they come on and give their global view, their global macro view, whether it's what's going on in the U.S. It could be something on Japan, Europe, the globe in general. But this is really, really good stuff. This is really, really cutting-edge stuff that's free. We would pay to get this, but we don't have to. And I've been reading this for many, many years and turned John Ross onto this, and that's helped him really develop a global macro view with a degree of sophistication that a 26-year-old kid should not have, but he does because of really reading this stuff each and every day. We've gotten some of our best intermediate and long-term trading ideas from here, right from here. Again, it's a great thing. And if you start to read it, you'll be stunned. Again, it may be a little esoteric at first, but stick with it. Stick with it. And you'll be stunned how much you will grasp and how quickly you'll start to see that some of these things that people said, you'll start to do the feedback loop and start to see some of these things start to play out in your readings and your scanning. So it all then you'll be surprised how quickly it all starts to make some sense, and you can start to get a view and develop your own view independent from the market. You understand the market view, but this allows you to develop an independent view. This gave us, really, reading through this, a bit of confidence to really get in front of that credit crunch trade. Morgan Stanley was very much out in front. Stephen Roach at the time, who was writing for them, right now Steve is a big deal in Asia, but he doesn't write for them every day, but they still have some great economists that write. But Roach talked about these major global imbalances in the world, and pretty soon we're going to have to start rebalancing, and he did a great job of explaining that. And we also got a lot about how derivatives in one market, a problem in one market is a derivative problem, and the size of the derivative problem was massive, that Morgan Stanley explained over a couple of months before we saw the explosion. So as you start to put 2 and 2 together, that was something that gave us confidence to position in front of that move in the credit crunch, and we did very, very well. That's an example of how just a few minutes a day can pay off in big money on a fundamental analysis.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.